Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at a stock that is trading dangerously close to its 52-week low, but what data might indicate it's about ready to turn around. So let's get into it. All right, guys, welcome back, and thank you all so much for being here. Today, we are going to talk about the telecommunications giant AT&T. Now, this is a company that was famously known for their high dividend yield, but over the last 6 months, their stock has been on a downward trend. So in today's video, we're going to take a look at the news behind this downward spiral, but also some new exciting data that we can look at that might indicate they're ready to turn things around with this upcoming earnings report. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. All right, let's dive right into the AT&T stock. Their stock trades under the ticker T and is currently priced at $25.72. This is down from highs back in May of up above $31, which you can see they promptly declined after that and have been on a downward trend ever since. Now, there were a couple of announcements that were behind this downward movement. First had to do with the company announcing they'd be spinning off Warner Media, and the second had to do with cutting their beloved dividend. AT&T plans to reduce its dividend to account for the distribution of Warner Media to AT&T shareholders. It expects the slimmer AT&T to only spend about $8 billion of its annual free cash flow on dividends after the deal closes, compared to the nearly $15 billion last year. So of course, this was very disappointing news to investors who loved AT&T for that dividend. This meant that the company would be basically cutting their dividend in half, ending the long streak of 36 years of dividend increases and removing them from dividend aristocrat status. Now, with the AT&T stock trading so close to that 52-week low, investors are wondering where the bottom is. So now I want to take a look at some newly available data that might give us some optimism for the upcoming quarterly report. And that is the newly launched website traffic page here on the TipRanks website. So this page is going to let you show the data of how many consumers are visiting a company's website. Down here, we can see the unreported period for the most recent quarter coming up, and we can look about monthly and quarterly. For the AT&T website, you can see quarterly that they're up about 7.6%. We can compare this year over year as well and see that increase at about 5.7%. Now, that isn't terribly exciting numbers, but keep in mind that AT&T still owns HBO Max. And if we're to take a look at those numbers, we see a much bigger increase. Their total website traffic is up 321% year over year. That is a notable increase. And that could bode well for their new earnings report that is coming up in just 6 days. AT&T's third quarter earnings report is expected to come out on October 20th. Now, for this quarter, they're expecting earnings per share of 79 cents, which is fairly in line with the second quarter where we expected 80 cents. However, you will note that their second quarter earnings did come in as a miss. Where 80 cents was expected, they did just report 21 cents. So hopefully for this upcoming quarter, we'll have a nice positive surprise. Now, I do want to touch back on the news of AT&T spinning off Warner Media to Discovery, as many people were shocked and upset about this, but the goal is to create a more streamlined and focused company. With this detail, AT&T would receive $43 billion in a combination of cash, debt securities, and Warner Media's retention of certain debt, and AT&T shareholders would receive stock representing 71% of the new company. The companies expect the transaction will create substantial value for AT&T and Discovery shareholders by bringing together the strongest leadership teams, content creators, and high-quality series and film libraries in the media business. The deal is expected to close by mid-2022. With all of the changes happening at AT&T, analysts are feeling a little cautious about the stock. But one analyst feeling bullish is Walter Piecyk from Lightshed Partners. He believes AT&T's wireless and fiber growth opportunity is not being properly recognized by the market, adding his view that it won't be long before share repurchases become part of the narrative. Walter is one of 13 analysts that currently have a rating on the AT&T stock, and it does come in as a hold right now based on 4 buy ratings, 8 holds, and 1 sell. The average price target comes in at $31.30 per share, which would be an upside of 21%. Taking a look at our detailed list of analyst forecasts, we can see all of the price targets provided do have an upside, several ranging around the 9%, many around that 16% at a $30 price target, and on the high end we have a $37 price target for a 44% upside. Now, of course, I would love to hear from you guys and your thoughts on AT&T's growth potential for the future. Do you think that website traffic data could lead us to some great earnings surprise in their upcoming quarterly report, or do you think there's still further for this stock to go down? Let me know in the comments down below. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching, and I will see you back here next time.